As we speak in this pre-market session of the 19th of July 2021, Marin Software Inc. is up of about 3% or thereabouts. Let's quickly have a look and see what's going on. So that's it. It's up 3.64% in this pre-market session. Currently trading at $9.1 and just converged with its volume weighted average price. We can see it is correcting within a longer term uptrend, although the MACD is below the signal line. The shares is roughly about 230% or about 200% up, so above its 200-day moving average. Yes, we can evidently see the MACD is below the signal line. Momentum is not strong at all. The RSI is indicating it's at roughly 50%, so the signals are just gradually improving. Before now, as at the 16th of July, the RSI was below 50, but given this 3.64% we are looking at right now in this pre-market session of the 19th of July, it has improved up by about roughly 6%, so it's currently at 5.90. Okay, no, it's okay, or currently at 48.01, so it's a slight increase, about an increase of about 5% or thereabout. So but that's an indication, or rather a validation to an extent, that it's pretty much very much bearish. Yes, the signals are still very much on the bearish side. But the opportunity is there. So look at what these folks at Seeking Alpha wrote about Marin Software. This was as far back as the 14th of July. It says Marin Software has rallied over 750% in the past month, gaining momentum from several positive developments. And new European Union antitrust investigation into Google's ad tech tools opens a door for Marin to gain market share with its own digital advertising management platform. The company announced a partnership with Instacart delivery service, representing a new growth opportunity. And the author of this piece says they expect shares to remain volatile until financial trends become clearer. Okay, so it says Marin Software offers a cloud-based digital marketing platform, you know that as well, across search, display, social and mobile channels. Advertisers use Marin to manage ad campaigns across multiple publishers with tools to optimize spending and maximize return. This has been a difficult segment for Marin, considering the intense competition and a quickly changing landscape that has pressured sales and earnings over the last several years. That said, the stock is getting a second life following a string of positive developments for ad tech in the last month, pushing Marin to a 5-year high, up 600% year to date. The potential here is for an emerging turnaround story and improving long-term outlook. That said, considering the impressive rally in the stock already, they expect shares to remain volatile until the financial impact and growth trajectory becomes clearer. Marin is an interesting stock and a potential turnaround story by highly speculative Marin is an interesting stock and potential turnaround story by highly speculative in the near term. Okay, but not exactly know what they mean over there. So why did it rally? See, it rallied sometime in it rallied. Yes, we're looking at over 600% extension, even though it's currently retracing at the moment, currently bearish at the moment. So it's currently sitting at a market cap of, what's the market cap we are looking at right now? We have a market cap of they have it as $190 million. We have it as 96.3. Indeed, since that time it has continued to retrace. So at a market cap of $93 million, Marin Software has been a massive winner in recent weeks, climbing over 750% from its $1.68 closing price on June 22nd and almost $19 million market value as a nano cap at the time. The stock traded as high as 27.26 on July 6, 2021, highlighting the extreme volatility. June 22nd is an important date for shares of Marin, which began rallying off an announcement from the European Commission, the region's regulator, that the group is investigating Google into possible anti-competitive conduct. The concern here is that Google maintains privileged access to search data and analytics, dominating search advertising while offering its own marketing tools through DoubleClick, in direct competition to other advertising technology companies like Marin Software. The question is whether Google is distorting competition by restricting access by third parties to user data for advertising purposes on websites and ads, while reserving such for their own use. The European Union Commission press conference. Okay, that we're not going to read that. So there's also another interesting thing. Say, coincidentally or not, Google took a step on June 24th. That would be 2 days thereafter. By announcing that it will be delaying a phase out of third-party cookies on the Chrome browser. Chrome obviously is owned by Google. While the company did not specifically cite the antitrust probe in its decision, cookies are a key part of the online advertising process based on tracked data that websites use to gain insight into visitors' browsing patterns. Marin Software incorporates cookies to improve analytics across its platform, allowing advertisers to get better targeting spending. While it is uncertain what will ultimately replace cookies on the Google Chrome browser, the delay is a positive for Marin, as it adds a layer of depth and value to the company's tools and solutions. The stock further gained momentum on the news. So yes, technically we can see the stock has retraced below all of its short-term moving averages, but still trading at a premium to its 50-day moving average, which is more of an interim moving average. The 14-period slow stochastic oscillator indicates that the stock is waning. There isn't enough momentum based on the daily model. So let's look at the same model we just saw. Now this is a live one. So we have a 40% extension, for roughly approximately 55% extension right now in this pre-market session. So the 14-period slow stochastic oscillator is waning, and indicating that market participants are not that keen. They have lost interest. But the unbalanced volume indicator is positive. It's bullish. The slope of that indicator is positive. That's this one, and suggests that buyers are presently more active than sellers, regardless of the bearish signals and the poor momentum. So easily, I think Marin Software has prospects, and fortunately it has retraced, making it a lot cheaper. And the volatility has gone away slightly. The short interest has also been stacking up against the stock. So all of those are that short interest has a contrary bullish implication. So the fundamentals, they are doing business, they're in business, but they're not making a lot of money. They're struggling to make money. But if you want to look at it that way, then you decide how you're going to get involved, if you want to get involved. But I think technically Marin Software is a buy in the short term, and the future looks bright as well. So if you really want to get involved, by all means, do go ahead and get involved. And as always, it's always with a small amount of money, because this correction it is looking at right now, it's been facing right now, might continue, even though it's roughly up by 5% as we are recording this right now in this pre-market session. There's no guarantee that it will now. It has called a peak. It has reached a bottom. There's no guarantee. It might still retrace further. But I think if you want to buy it as it is now, by all means, just get in with a small amount of money, see what's going to happen thereafter. yeah, for us technically it's a buy. The short interests, the low float, relatively low float, or rather shares outstanding, roughly 10.967 million shares. And in a very short time, the fact that it has corrected a lot, all of these add up to make it a decent stock to get involved with as it is right now. I know indeed some people may have gotten involved at higher prices, but yes, that's what happens. It's rather unfortunate, but don't give up. The stock is a good play. You know, yeah, it's a good play, and easily we call it a buy. Even though at the same time as well, we would also would love it to retrace a lot further, but it has retraced a lot. The correction definitely is close to close to. I mean, this correction we're looking at right now is over 20%, I believe. So easily it's a buy. If you sum up all that it's doing, and all that is going on in the broader space it's operating, the antitrust, anti-competition investigation Google is facing, and all that stuff. It opens up opportunities for Marin software. So yeah, if you want to get involved, by all means to get involved. But as always with sums you can always afford to lose. It's a sort of stock you should rather buy and keep it for the future and see how things pan out. So Marin software for us is a buy, and thank you very much for watching this video.